What people don't realize about diamonds is that you've got an asset class that has kind of dollar level volatility. Diamonds are something like the seventh or eighth most widely traded currency in the world. Most people don't realize that there is price discovery with diamonds. There's a lot of, maybe smart money in the financial world that don't think of diamonds in the way they should or could.
Why now? Why would I be interested in diamonds now and not think, oh, this is interesting, maybe in a couple of years' time or maybe in 5 years' time I'll get round to that? Why would I move it up my list of, explorations now?
Believe it or not, it's one of the oldest industries, but still a
No.
growing industry. It's still not full production up and running from when a lot of mines shut during COVID. You have a structure where you actually own the underlying asset and physically possess it. And we're at the beginning of a trajectory as we launched in 2018 and are still kind of racing to catch up to the opportunity and the demand that we have from within the industry, from some of the best kind of blue chip players in the industry that have over the last couple of years lost, what were 20, 30-year relationships with banks through no fault of their own. And so as we're capitalizing on it and growing, now is the time to get on board.
Nice. Talk to me about the Delgato Finance Fund. What do you do?
Sure. So the Delgado Finance Fund is actually the first non-bank institutional lender to the global diamond and jewelry industry. Yeah, we provide capital for companies up and down the supply chain that have lost access to commercial banking.
And why might your clients have lost access to commercial banks? What's happening there?
Post 2008, 2009, credit started to change, or rather, the way the banks looked at credit started to
Yeah,
change. You
no.
had things like the Basel Accords come into effect. And I would say, a lot of non-core industries, not just the diamond and jewelry industry, but a lot of non-core industries started to lose access to commercial credit. And the diamond and jewelry industry was hit particularly hard by that.
So when you say up and down the supply chain, does that go from miners right through to retail? How does that work?
That's exactly right. So clients of ours are everyone from publicly traded mining companies to large multinational diamond manufacturing firms to luxury retailers on High Street anywhere.
And what are you diamond guys? Is that your background, or you come from the finance side?
Both. Andres comes from the finance side, having run his own hedge fund for almost 20 years. I started my career as a teenager and a diamond cutter in New York's Diamond District.
And is this a crowded space, or are you pretty unique?
We're incredibly unique.
I bet.
It's a very simple business. It's a hard asset lending with an asset class that's very liquid and non-volatile, but the skill sets that it take to execute the business not easy to find.
Talk to me about the diamond industry at the moment, or certainly recently. What states it's in?
The high-end jewelry market, the real luxury, the luxury retail, luxury houses, high-end is doing very well. Something that's completely uncorrelated to anything else. You have a Sharpe ratio of like 9 or better, which is somewhat unheard of. Pricing remains stable. Demand is there. And that's typically what we finance.
And what's the story you want to get across to people at AssetRush? Because I know that there will be some people there who will never have thought it possible to get into the diamond industry and to invest in that space. So what is it that you want them to understand?
That is the exact story. If there's one thing that we wanted to get across, it's the stigma that, still sticks around to the industry and that we always like to dispel. There's a lot of, maybe smart money in the financial world that don't think of diamonds in the way they should or could.
Fascinating.